like to call the Fairfield County Council meeting to order this Monday, January 25th, 2021 at 6 o'clock. Can we get approval of the agenda?
Move, Mr. Chair.
Can we get approval of the agenda?
So moved, Mr. Chair.
Second.
It's been moved and seconded that we approve the agenda. Any discussion? All in favor, let it be known by the word aye.
Aye.
Opposed, the same. The agenda stands approved as is. Can we get the invocation by Vice Chair Green?
Dear Heavenly Father, as we gather here tonight, we humbly ask your guidance as we make decisions to improve the quality of life for Fairfield County residents. We ask that you lead, guide, and direct our decisions as we make difficult choices to balance the needs of both economic development and human services. Father, we ask for your comfort, strength, grace, and mercy as we deal with the ramifications of COVID-19. Bless all of those who are serving others during this difficult time. In Jesus' name I pray. Amen.
Amen. Okay, the approval of the minutes. Let's take both the regular meeting and an organization meeting and the regular meeting all at the same time.
So move, Mr. Chairman. Second.
It's been moved and seconded that all three sets of minutes stand approved. Any discussion? If not, all in favor?
Aye.
Opposed, the same? No opposes. So we have a public presentation, so we're gonna ask Ms. Davis to please read the presentation.
The members of Fairfield County Council, representing the citizens of our county, recognize the occasion of your 100th birthday as a milestone in your life and wish to join you in its celebration. This is for Mr. George Lamar Alexander, who's turning 100. We honor you as an exemplary citizen and role model for all in our community as you have and continue to prescribe good examples for your family, friends, and neighbors to follow. As you visit with family and friends now and in the future, we hope that you will share many precious memories of lives together. Through learning the value of hard work by working alongside your grandfather to plow fields, working in cotton mills, and then enlisting in the United States Marine Corps at the age of 19 with service in World War II, the Korean War, and the Vietnam War, you have selfishly served your community, state, and country. Watching your family grow up, you have lived and continue to live a full and blessed life. Because of your generous heart, willingness to help others, and your devotion to your friends, your church family at Mount Zion Baptist Church in Mitford, your marriage of 63 years, 4 children, 2 grandchildren, and 2 great-grandchildren, we recognize the testimony of your life and hold it in our very highest regard. As you encourage others, may we all live by your example to love your family, community, and country, but above all, love our Lord and Savior Jesus Christ. May we further live by your example of devoting many hours to prayer and reading Scripture. We wish to express our admiration and respect for you and your life, and do hereby honor you as an esteemed example of citizenship and service at its best. As a tribute to your longevity, love, and devotion to your family, the community and county at large, we congratulate you on the celebration of your 100th birthday and wish for you many more healthy, bright, cheerful, and blessed birthdays in the years to come.
Thank you, Ms. Davis. Any council members have any comments that they might want to make? Mr.
I just want to tell Mr. Alexander happy 100th and Semper Fi.
Anybody else? Again, congratulations to Mr. George Alexander for his 100th birthday. So we're down now to public hearings, which are none. Ordinance, resolution, and orders. A, first reading by title only. Ordinance number 763. Ordinance to amend the Fairfield County Land Management Ordinance number 599 to provide for the zoning reclassification from R1 single-family residential district to R2 inclusive residential district of 1.16 acres owned by Russell and Marilyn McDonald, the applicants. This is tax map number 134-04-02-09-000. Property is located at 1616 Antioch Cemetery Road, Ridgeway, South Carolina, 29130.
Motion to approve, Mr. Chairman.
Can we get a second?
Second.
It's been moved and second. Since this first reading, there's no discussion. All in favor? Let it be known by the word aye.
Aye.
Opposers? Stands approved. B, second reading ordinance number 761, an ordinance to amend the budget ordinance to fiscal year beginning July 1, 2020, and ending June 30th, 2021, and authorizing the supplemental appropriation of funds for increased fire services.
So moved, Mr. Chairman. Second.
It's been moved and second. Any discussion? We have Mr. Pope here, so if we got any discussions around this, he'd certainly be glad to try to answer them.
If we could, Mr. Chair, just get a brief description of what else we have.
Okay. Sir?
If we could get a brief description as to, for the public's knowledge, as to what's going on.
Okay, Mr. Taylor, you can do that.
Certainly. I'll let Mr. Pope, Jason Pope, discuss what necessitates this request. But I think currently we have, if I'm not mistaken, Ms. Bass, 125,000 budgeted toward this particular project.
It's 175.
175. Okay. We have 175 budgeted toward this project, and Mr. Pope has made a request to do some additional things at the River Road Fire Station, which necessitates another 200,000 being added to that. Mr. Pope, if you will go through what the changes that you're proposing are to justify the additional 200,000 that's being requested.
Good evening, members of council. Thank you for the opportunity to discuss this very important project. As Mr. Taylor said, several years ago, this project was funded at the level of 175,000, and we were unable to actually buy land for a couple of years, so we just got the land acquired last year and began the project and really started looking at a lot of information, budget numbers, trying to put together some really hard numbers. And to build what I think all of us will be proud of, a building that you could really stand behind and say, look at this. We realized that 175,000 was not going to be enough. We could build something for that. But I don't think, I know I wouldn't be happy with it. I don't think you would be happy with it. I don't think our citizens would have been happy with it. It wouldn't have been able to accommodate the needs of the area or the needs of the fire service, for that matter. We could probably get by with putting up a pole building, a 3-bay building, and nothing else if we don't add this money. That means you just kind of get a box with some trucks sitting in it and nothing else. No offices, no bathrooms, no living quarters, no meeting rooms, no nothing. So we, together with the county planning and zoning, with Mr. Netherton, who's in charge of special projects, we just sat down and got some new numbers. Okay, what's it going to take? And to add the full station part, to build something, a full building that's houses the apparatus, and also living quarters to go in it, because as soon as you put living quarters in a building, you got to put fire sprinklers in it, and so that's why we came up with a number of $200,000, and that is just building the building. The agreement with that is back into our building maintenance department to actually do a lot of the interior work after the fact. So that's where we're at, and that's where we came to you guys to ask for additional funds.
Go ahead.
Was there a reason that wasn't considered when we first started with the project? How do we go from wanting a $175,000 building to a $375,000 building?
Well, I wasn't here when that original budget presentation was made, so I really can't tell you what has actually happened before I started work here 3 years ago. So that tells you how long this has kind of been in progress. In progress.
Ms. Gibbons, get your hand up.
Thank you.
Yes, sir.
Any other questions from council? If not, are you ready to vote? All in favor, let it be known by the word aye.
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 Opposed, the same. Okay, second reading is approved. Item C, resolution number 2021-01. A resolution by Fairfield County Council authorizing the acceptance of the conveyance of property to Fairfield County. Can we get a motion to approve?
So move, Mr. Chairman. Second.
It's been moved in second. Discussion. Mr. Davenport, you want to talk about this?
Sure. Thank you, Mr. Chairman. Council. So we've got a contract on property on Peach Road. It's going through council and been approved. The cost is $400,000, and we've got a grant for $300,000 from the state of South Carolina to buy the property and ultimately turn it into an industrial site or park. And we've got an additional $510,000 from the co-op system to cover which will cover the remaining $100,000 and allow us to cover all the engineering costs associated with due diligence and begin to extend water and infrastructure to the property. So it'll come to the county at no cost. We've paid for the engineering through grants, and we'll buy the land through grants.
Okay, Mr. Taylor, I'm sorry. Do you have anything to add to?
Again, we're just glad to be able to do this through grant money, and we thank the co-ops, we thank the state for the money they've put into this. It allows us to start the development of another industrial park. This is the initial 66.3 acres. There's another 954 acres that are at the site that we would have an option on, or at least a first right of refusal, should we need additional property for an industrial prospect. It will also help us facilitate getting water down Peach Road, which will open up all that territory for people to hook to municipal water.
Okay, thank you. Any questions from council? If not, ready to vote. All in favor?
Aye.
Opposes? No opposed, so stands approved. Okay, we're down to board and commission minutes, which are none. Board and commission appointments, none. Old business, none. New business, none. And then we're down to the county administrator report. Mr. Taylor.
Yes, sir. Thank you, Mr. Chairman. The first item we have is the presentation of our fiscal year 2019-2020 audit. We have Mr. Tom McNeish of the firm of Elliott and Davis, who has prepared our audit, here to present that audit to council tonight and to answer any questions that council may have. Mr. McNeish, we do have him by way of video.
Mr. Chairman, if I may, I'm just going to take you through a brief presentation just to outline the audit process for council, and this will include our required communications that we have as your auditors to the governing board. And with me tonight is Kelly Jones. Kelly oversaw the audit team, managed the audit team, and so joining me here also. I want to start off by thanking Ms. Bass and Ms. Johnson and your management team and your finance staff. The audit is always a tough process, and it was particularly challenging, like everything these days with the pandemic. So we greatly appreciate all their work getting us what we need, and at the same time keeping things moving in the finance department. So just a quick overview of what we're going to cover. As I mentioned, these are our required communications to keep you informed of the audit process. We'll also cover our 3 audit reports, and then we've got a couple of findings and recommendations as a result of performing the audit. Always like to start off by just talking about what the financial statement audit is, and more importantly, what it's not. So it's not a fraud audit. It's not an audit of internal control weaknesses. What it is us coming in and giving our opinion based on our audit procedures as to whether the county's financial statements are correct, whether they're materially correct, and more specifically, whether they're materially correct in accordance with generally accepted accounting principles. And those are just the rules of accounting that Fairfield County Finance Department uses, as well as any other county or local government that is having their financial statements audited. So prior to beginning the process and prior to requesting information from your finance team, we do homework in the form of planning the process. We're going to assess risk where we think that potential for misstatements or errors in the financial statements are most likely, and then design our audit process based on that. Within that, we're going to use a materiality threshold. So what that means is we're not going to test 100% of the transactions and balances of a county. If we did that, the audit would be a never-ending process. So we're going to select samples of transactions and evaluate and test those to be comfortable in issuing our audit opinion. The county's internal controls over financial reporting are very important to that risk assessment. So if we feel like controls are weak in a certain area, that means we're going to have to do more work to make sure that there's not a misstatement, a material misstatement in the financials. So an example of an internal control would be something as simple as performing the monthly bank reconciliation. We're going to look at those bank recs. We're going to see if they were prepared by someone or reviewed and approved by someone other than the person that prepared them. And then we're going to look to see whether they support, in this case, the cash balances that the county holds. So as I mentioned, our responsibility is to provide an opinion, a third-party independent opinion as to whether your financial statements are fairly stated. Why does that matter? Well, as you can imagine, it's going to be important to the rating agencies, your bondholders. We're also going to be issuing our opinion on your compliance with grant requirements. So federal granting agencies are going to value that opinion and look for it to see if you've got that third-party stipulation that things are in good order as far as the balances and compliance requirements. Your finance department uses significant accounting policies. A lot of those are disclosed in the footnotes to the financial statements. We're going to audit those also and look to see if they're reasonable and in accordance with those generally accepted accounting principles. Contrary to what sometimes folks believe, accounting is not an exact science. Management uses estimates to arrive at some of the numbers. We want to make sure those estimates, again, are reasonable and that they're based on sound assumptions. And so that's part of the audit process. I mentioned the financial statement disclosures. That's all the notes and text that's behind the basic financial statements. It's there to provide the financial statements some context. And as I mentioned, we need to audit those also to make sure that they're materially correct. Throughout the audit process, we'll have, if there's misstatements that we find, we'll work with finance to get those corrected. If there are mistakes or if there are entries or transactions that are unrecorded that need to be, again, we'll work with your finance team to make sure that those transactions are recorded so that the financial statements, again, are materially correct for those people who use them. At the end of the process, we get a representation letter from management where they're going to give us in writing assertions to certain things about the financial statements and their correctness. And this happens with any audit of any local government that we're performing. If we have disagreements with management as to how something should be presented or recorded, if we're not able to resolve those, then we would be required by the auditing standards to come to you as the governing board and find resolution in those issues. We did not have any such items that resulted in significant disagreements or disagreements at all with management. We were able to talk through all of the reporting and disclosure requirements. We're not aware of any consultation that your finance team was required to have with other accountants. We had several significant issues, as we usually do in any audit, but significant issues that we discussed with management in terms of disclosure and transactions being recorded. Those were all productive discussions where both we as the auditors and management concurred as to the proper direction in terms of disclosure and recording those transactions. We didn't have any difficulties while performing the audit. If we felt like we were getting stonewalled, if we were not receiving information that was accurate and timely, then again, we'd be required to come to you as council and let you know about those issues and seek resolution so that we could complete the audit. We did not have any type of that matter and would not have expected that from your finance team. In the process of performing the audit, if we find that there are significant deficiencies or material weaknesses in those internal controls that I mentioned, then we're required to report those to you. So we've included a couple of those in your report. I would not say that these are what I would call red flag issues, but they're things that need to be corrected and brought to management's attention. And again, we're required to communicate those to you also. I will say that in our experience with Fairfield County and the Fairfield County team, whenever we've identified internal control issues, they've been remedied very quickly. Oftentimes, a process has been put in place before we've completed the audit. We found that to be the case this year. Other written communication, really the written communications that we had with the management team were really limited to that management representation letter that I mentioned, the engagement letter that the county signs at the beginning of the process, and then our written reports. So no other out of the ordinary written communication. So briefly, our 3 audit reports. First, the one I mentioned, the report on, or our opinion on the financial statements and whether they're fairly presented. We have issued an unmodified opinion, and so that's where you want to be. That's a clean audit opinion on your financial statements. And in a nutshell, it's for us to communicate that based on our audit work, we feel like the county's financial statements, and we're able to issue an opinion that the county's financial statements are in accordance with generally accepted accounting principles and are materially correct. And again, that's going to hold great weight with bondholders or rating agencies that are wanting to assess the creditworthiness of the county. I've mentioned internal controls. As a government entity, like any government entity, for your financial statement audit, we're required to issue what's called a yellow book report or a government auditing standards report. And it's really going to talk about our assessment and the use of your internal controls to assess risk. So this is where, if we do have findings that we need to report to you, we're going to reference those in our yellow book report, and I'll briefly cover the 2 findings that we had in just a minute. In our final report of the 3, I mentioned the compliance requirements associated with your major programs, your federal programs. So like many counties and cities, Fairfield County makes use of funds that are provided in form of grants by federal agencies. And so what we do is go and look to see that those expenditures were in compliance with the grant requirements. So any given grant is going to have a lot of strings attached, and it's going to have a lot of technical requirements that the granting agencies are going to demand to make sure that the money is being spent in accordance with their intent and for the benefit of So the good news in terms of that report is we issued an unmodified opinion, and that opinion, similar to the financial statement audit, states that we feel the major program compliance requirements were met by the county. The 2 findings that we had as a result of the audit, first of all, in terms of wire transfers, you want to have a setup or a system to where the person who is initiating a wire transfer is not also the person who's approving. So have good separation of duties. I think that's something that, as I mentioned before, your county team working with your treasurer's office has got a process that has already been implemented or will be implemented that we've looked at and feel like it will address that separation of duties issue, but you definitely want to have those checks and balances where if one individual has access to the funds, they have to go through an approval process before those funds are dispersed. In terms of cash management, I think the main, the center of the finding here was that particularly if there are funds that are being maintained by the county in a fiduciary responsibility, and that's often, as y'all probably well know, that's often the case with local governments. A county government will maintain, for example, cash balances for a school district, and that's fine. That's by design. And so you want to make sure that those funds are properly separated, segregated, so that there's a trail of which money belongs to, in this case, a school district or a library or another entity for which the county is performing that fiduciary duty. So like with the wire transfers, I think that your finance team has showed us that in working closely with your treasurer's office, that those will be those objectives to have good cash management and good segregation of fiduciary responsibilities is going to occur. Now, we don't take that for granted. So as you're probably aware, for next year's audit, one of the first things that we do, and one of the first things we'll do for that audit, is to go in and do additional testing and overlook to see if the wire transfer plan and the plan for cash and investments management has been fully implemented. Mr. Chairman, that's our brief overview on the audit process, and can certainly take any questions that council may have as far as the audit process is concerned.
One of the things, Mr. Taylor, we did is we sent questions for the audit. Has it been given those questions?
Ms. Bass will do a presentation on those following this presentation by our auditor. Ms. Bass,
I'm ready.
no. I mean, I don't know if we're finished with them yet.
Okay. So the question that we addressed then is in the presentation.
Yes, sir.
Okay. But I do have one question though, and that's on page 31 of the book, item 7. I would like for you to explain that and also talk about the best practice.
Regarding, Mr. Chairman, encumbrances?
Yes.
Yes, sir. So that's a policy that we oftentimes see to ensure that purchase orders that were in effect at year end, but for which there has not been expenditure, to make sure that those expenditures are approved in the subsequent year's budget.
Okay. And you consider that a best practice?
Yes, sir. We see local governments do that. Yes, sir.
Okay. Do we have any questions for the auditor? No?
I'd like,
Go ahead,
yes.
Ms. Green.
I'd just like to know how you follow up on your findings. How do you remediate issues that are carryover? Say, for instance, you have findings from 2019-001, and I see that it seems as if you're going to be the people who are to review the procurement manual. So can you kind of explain that a little bit as to how you're contracted to do that and when you expect things like that to be done?
Yes, ma'am. The review of the procurement manual has been completed, and we've provided the county our report and recommendations. As far as the findings, yeah, you're correct. The way you characterize, we're required to for findings that occurred in the prior year. So, and you'll probably see on page 87, there were 2 of those. And so we look at those 2 areas and we go in and pick additional samples. We look for procurement. We look at additional voucher packages. We walk through the approval process. We do more testing than we would normally, just to make sure that we can get comfortable that those items were truly addressed. Same thing for the pay changes and additional pay. There was documentation that we identified as not being in place in the prior year. So we increase our extent of work and testing in that particular area to get comfortable as to whether that's been remedied.
Yeah, it seems as if we take a look at that findings, when you take a look at 2019-002, the changes that have been made to wage change notices and the forms that are being used, have you reviewed those forms, or what's your process for making sure that people who are authorized to sign have signed the wage change statements?
So I'll step in on that one. As a part of our follow-up procedures this year, we selected a sample of employees that did receive a pay change during the year. And for each one, we reviewed the new form that's being used and noted that it was signed, I think I remember off the top of my head, by 2 people, and then also by the county administrator if it was a direct position. I'm not sure if that's exactly what it is, but it was in accordance with the policy that was put in place as the corrective action.
Now, it is listed that that some employee signatures appear inconsistent across selections. Can you explain that to me?
Yeah, last year it looked like there were signatures that were the same person's signature, but looked different. And that was just one of the many things that we noted across our testing, along with the inconsistent forms, as inconsistent number of approvals, and some of them not providing the reason for an increase.
So then basically the inconsistent signatures across the selections don't mean that someone signed for someone else.
Not necessarily.
Not necessarily. Does that mean that you double check the signatures again to make sure that the inconsistencies were reviewed?
So we're not going to be in a position to where we're not, remember back my comment in the beginning, these findings are going to be a result of the financial statement audit process. I don't want council to get the wrong impression that we are signature experts or able to determine, whether someone signed for someone else. I think that was just part of the observation when we were performing our standard testing.
Thank you.
My question would be,
Ms.
from
Paula,
the
go ahead.
from the findings you found in 2019 to the findings you found in 2020, in that particular situation, were those corrected?
That's correct. We felt that the 2019 findings, your management team came up with a corrective action plan, which they're required to do. It's submitted in writing. We go in, follow up to give our opinion or give our judgment as to whether those 2 things were done. And based on our follow-up testing for the 2019 findings, we felt like those were remedied.
Thank you.
Any other questions? I have another one since we talk about that item 2019-001, procurement on page 87. As of yet, that have not been corrected. Because the procurement manual had not been completed. Wait till you finish, Ms. Paul.
Our process was to, as I mentioned, to select those additional transactions, purchases, and see if we had the same finding or exception occur. And
Okay.
so when we did that, we did not find that same exception to occur.
Okay. Mr. Pauly.
Well, I understand the concern surrounding the procurement policy and other policy issues. Council needs to look to itself and not the county administration or staff or the audit team. Under our form of government, the council determines and sets the policies, and it is the administrator's job to execute the policy. Feel free to reference South Carolina Code of Laws 4-9-630 regarding the powers and duties of an administrator in the council administrative form of government.
Thank you, Mr. Pauly. So are you saying then that the procurement manual should have been assumed by council? I got you.
Yes, sir.
Okay, one other question. Can an agency that council fund have their monies intermingled with other funding sources? Now, I think the answer to that is yes, but I'm just asking. Sir?
So, to make sure I'm clear, this would be in that fiduciary capacity that
Yeah.
this is money that's being held and invested for another agency?
No, it's money. We fund various agencies. Okay, they get money from other sources. Can they take that money and just intermingle and put it in the same bank accounts and all that?
That's going to depend on what the requirement is for, if I'm the receiving entity, what are the requirements that have been imposed on me by the granting agency?
Okay, all right. If there are no other questions, Mr. Taylor,
Ready to move on to the next item. This is what was referenced earlier. Council did submit to staff a list of questions concerning the audit, and we have compiled the answers to those, which Ms. Bass will be presenting. And she's got a presentation on that. Ms. Bass, if you would start.
All right. That's all right. I'm going to take this off where I can breathe a little bit better. Good evening, and I want to start by just thanking everybody for sending them ahead. This is an extremely busy time of year. We've got lots of annual reporting, lots of IRS deadlines, so I do appreciate that. I just kind of took them in order as we got them. I think the first one was related to the audit budgetary comparison schedule. It says local organizations, the funding is $2 million on pages 55 and 56. The budgetary worksheet on page 43 allocates $1 million. So why is there a difference? The Schedule 1 on pages 55 and 56, they include the general fund, the hospital, and the library. The budget worksheet is only that department's allocations. So there's not a difference in the audit and the budget. It's a different in what that schedule includes. And the next question was directly related to that same schedule. What other organizations are in that schedule? And that is the hospital and library. And the reason for that, the county collects a separate millage specifically for the hospital and library, so we roll that up. Any of the other agencies we allocate money to, behavioral health, council on aging, some of those, all that is budgeted within our general fund department, 100,035.
Can I ask a question?
Yeah,
Yes.
go ahead.
When you say hospital, are you referring to the new Providence, or are you referring to?
The new hospital.
Okay, I got a follow-up question then. So Mr. Taylor, the money, the 1 million we pay a year, that comes out of this money?
Part of it, I mean, I don't know if it covers all of it because it's a millage based and the millage may go up or down, depending on the circumstances of our local economy. But yes.
Yes. We collect a separate millage specifically for that hospital. It's in Fund 507.
Do you know how much that millage is generating currently?
It usually generates really right at $1 million. So it's been slightly over, but it's pretty dead on. This is just a schedule. It's kind of busy, but just to show you that this is what we use when we prepare the Schedule 1. And you can see right up here at the top, the library is Fund 801. The hospital is 507. I think this is the total here, this $2,660,000. This is what you see in the budget ordinance. These are all Fund 100s, and there's your total for $1,050,000. And if you add all that together, that's where you have the allocations in your general fund department, your hospital, and your library. The next question is, why aren't Fairfield County Library Commission and Fairfield County Office on Aging audited in accordance with with government accounting auditing standards? And simply put, is they're not required to be. The county is, but they're not required. Any agency is going to be, they're going to be subject to the guidelines that regulate their agency, not necessarily ours. There was a comment, an internal control significant deficiency. And I think on page 84, this page is immediately following our single audit. But right here where it identifies, this is for the whole audit, where it says a significant deficiency identified, and it says, yes, these are the two findings. The federal award related to the single audit, there are no significant deficiencies. So I just wanted to be sure that it was clear that that page is related to the entire audit, not just the single audit. The question, however, was, it seemed to be thought that it was a significant deficiency because we didn't use an indirect cost. We have one grant. We only have one grant out of all of our grants that even allows indirect cost. So we don't necessarily make an overall election. That is the DOT grant. We do use 10%, and it's within our cost allocation within that grant. In regards to the 2019 and 2020 findings, these are just, and Tom and Kelly probably already covered some of this, but each year prior to the field work, they come around and they talk to everybody. They talk to finance, administration, the people at the courthouse, and then they talk to random other employees as they see fit, and just ask, do you know anything going on that I need to know about, to help them know where they might need to look harder, where there might be weaknesses. And of course, anytime anything is brought to their attention, they're going to increase their testing there, and that often would result in a finding. Anytime there is a finding, it's going to always show on the future audit, just as you saw the 2019 this year, because they're going to go back and look at that. They're going to make sure the corrective action plan is in place. They're going to review it with more extensive testing than normal. And then, like I said, those findings are going to show on the audit. So in reference to the 2020-001 relating to wire transfers, so the treasurer has already reached out to the bank, and she's in the process of determining what the bank can offer in terms of that two-person, one basically enter the transaction, one review and submit it. So she's in the process of doing that, and once, I guess, she kind of figures out what they have to offer, we'll work through developing formal procedure together. The second one, 2020-002, how will you review and rectify cash flow projections? And really, probably starting, maybe even before fiscal year end, Norma and I started having some of these conversations, and I was giving her some expense projections, through the end of the year. Because as y'all well know, we collect our money January, February, March, and, we have to make it last until the next January. And so she and I already had started talking about some of this stuff. And it, it's basically developing it into a formal process. Some of the things that I think she and I have agreed we need to do is set some minimum cash balances. When she sees there's an excess, she'll bring that to administration. Here's what we're going to do, and then do it, and just increase that communication there. Back to the 2019-001. So this does seem like a long time ago, but it was February that the audit and the findings were presented. In March, we started having a lot of shutdowns. We had modified schedules. We had a lot going on. And, to be quite honest, a lot of focus got shifted. It was about May 20th that the external review started. In June of 2020, we completed, there was a little bit of reorganization. The procurement department was moved under the finance department. That was completed at the end of June. And it was in July that we did receive the comments and suggestions from the external review. But part of that was just a review. They can't rewrite the policy for us. They basically went through each section and gave, recommendations based on what they see at other agencies, other counties. And so, but we have to actually go through that and implement each of those. And we are working on that. I hope it will be soon. I hope it will be. That kind of helps explain why it does seem like a long time, but there's a lot that's happened in the midst of that. And then anytime there is a finding, we're required to develop the corrective action plan. I think Tom touched a little bit on this. We come up with that. They don't tell us, you've got to do this, this, and this. They say, here's what we see is wrong, or here's what we see needs improving, and then we come up with that. And that's what we determined, that we needed an external review. We needed some comparison to other agencies, and then we needed to update. The last part of that question was, how will failure to get approval for purchases from council be handled? And the price level for purchases that comes to the council level for approval is $25,000. And that is not a recommended change. So I think that's coming to council just like it would be. So I don't think we're going to miss anything there. In reference to finding 2019-002, the pay change notices, the form has been revised. It requires 2 signatures, the HR director, the finance director, and also if it's a change on a department director, it requires the administrator's signature. All 3 of these lines are there, and it indicates when each one is required. So if something's missing, it's going to be very obvious. Wait a minute, Mr. Taylor didn't sign this, or wait a minute, the old and new rates also show. So you don't just say, okay, we're going to change the rate to this. You see where it was and where it's going. So it's quite evident what that change is. And then in addition, the HR director reports directly to the administrator. In the past, HR director reported to the deputy administrator. And here, this is the new form. I tried to zoom in on the areas here so you can see where we have the old rate and the new rate, and then you can see each signature line. So like I said, if one of them's missing, it's going to be very evident that something's not there. I thought you had a question. Okay. What is an estimate of office rental space in regards to the Hahn building? So the county has a lease agreement with the South Carolina Department of Emergency Medicine Emergency Management Division, thinking about EMS. We're responsible for operational and maintenance costs. We receive an in-kind benefit from them in terms of the space. We have to record the rent and the revenue. So the value is determined by the square footage is 186,000 square feet. Fair market value is $275,000. So we have an in-kind revenue line and an in-kind expense line. So they wash each other out. There's no net effect on operations. And can an agency intermingle its fund of county funds and private funds? So our allocations to agencies, they're not going to be their only source of revenue. They may get it from, depending on the size of the agency, from many, many different sources. And I think how they report their revenue would be based on the standards that the way their organization, however their agency is organized, they're going to have to report based on those auditing standards, which may or may not be the same as ours. We do require agencies, when they request funding, we require them to identify their purpose. And then, of course, y'all know they provide quarterly reports. So that's what we require. And the long-term liability note says that we have no unused lines of credit. So on page 36 is our schedule of long-term liabilities, and it shows everything, all of our liabilities greater than 12 months. We don't have any lines of credit, period. So that statement's there basically to say that there is no line of credit used or unused. If we had a line of credit and we were using it, of course, the payments and installments would be there. Even if we had a line of credit that we weren't using, that potential liability is there. So that statement is there to demonstrate that we have no line of credit at all. And the next three, I'm going to kind of address together. That they were very similar, so I kind of grouped them. Basically, the net decrease of $5 million, the decrease in fund balance, and then explanation of less taxes collected. So we'll start with fund balance. Basically, in a nutshell, if expenses exceed revenues, fund balance is going to go down. So for the fiscal year ending 6/30/2020, our general fund expenses exceeded our revenues by about $4 million. We budgeted the use of fund balance in the amount of $4,213,000. Usually, we have not ever had to do that. We've budgeted in the past, but fortunately, we've never had to actually use it. But this year, because revenues fell short, we did actually use that fund balance.
And again, we talking about the budget that ended June 30.
June 30, 2020, okay. Yes. The property taxes, this is the statement. It was referring to this statement on page 8. And it basically goes through some explanation of why our property taxes were decreased. A lot of it is related to activities at the nuclear plant. To explain that a little more, the three main pieces to that, our utilities taxes went down. So the property, the existing reactor, the property there, that assessment's done by South Carolina DOR, and that assessment went down. Of course, y'all know our millages stayed the same. So that means our revenue's going to go down. That assessment went down. The state business personal. So now we're going to shift gears to what was the new construction. So basically, when they were constructing the would-be new reactors, they had a construction city on the ground. And so over the last couple of years, as that has been disassembled, all that equipment has been moved, we're no longer receiving those personal property taxes on any of that. So that has decreased a fair amount. And then real property taxes, we had multiple real properties that were owned by SCANA that we collected real property taxes on. A good bit of those were transferred to Santee Cooper, which is a state utility authority, and they don't pay property taxes. So those are kind of the three components that explain that paragraph on page 8. Expenses. So a couple of the bigger items that were over budget. Our workers' comp was over budget by about $250,000. And that varies. You know, of course, we have to estimate it. Usually, obviously, based on history. If you end up with a lot of claims, a lot of exposures, it's going to go up. That experience rating is going to go up and drive that premium up. Our grant match was over budget by about $323,000. But this was for a good reason. I mean, it was for 2 economic development investments. So that's a good thing. That's an investment in future revenue. And then we had to make a transfer out to one of our special revenue funds for the CARES Act. So as y'all know, the South Carolina CARES Act, we could report expenses that we had related to the COVID pandemic. and we had about 604,000. That came from the state. So the state didn't execute the grant document until July of 2020. So we could not record the revenue in June of 2020. So we had to make a transfer out to that special revenue fund to balance our revenues and expenses. We have received that money, and in this fiscal year, we'll be able to reverse that transfer and record the revenue. But for the intent of 6/30/2020, that's how it showed. And that's basically, there's a schedule of federal expenditures. The state wasn't going to report it on their CFA until 2021, so we can't report it on ours until 2021. Our net position, so on page 15, kind of down at the bottom, you'll find the net change in fund balances for the total governmental funds, and that's about $2,494,000. That's the starting point on the top of page 16 for your net position. And the two main factors as you work down that page, about midway down, that contribute to that decrease in net position are the net pension liability and the total OPEB liability. Our net pension liability is basically our piece of the South Carolina retirement system's liability. The state's actuary performs that report, and we receive it and have to record it. We don't have a whole lot of control over that. The total OPEB liability, that is our other post-employment benefits. That is also performed by an actuary. It's based on the age of our employees, the length of service, how long we think the average person works here, all kind of things go into that. And both of these are governed by, the pension liability is governed by GASB 68, OPEB is governed by GASB 75. These are very futuristic liabilities. And they're unfunded liabilities. We pay for them when somebody retires. We pay, but they're very futuristic numbers, and they can change a lot depending on what retirement system does with contribution rates, depending on what happens with insurance. I mean, there are many factors that go in that can change that. But both of those, note 9 will give you a whole lot more detail than you probably want to know on the net pension liability, and note 11 will explain the OPEB liability. Attorney fees, they were budgeted at $150 and we spent $382. I want to be sure, I don't want there to be a misconception. That is not just general counsel. That is all of our legal fees. And that here are, I listed what most of them are. They're ongoing lawsuits, human resource matters, representation for the joint water sewer, and general counsel. But all of that is in legal fees. It's multiple different attorneys as well. Page 31, item 7. I think we talked to Tom a little bit about that. And I was explaining, a sip of water, sorry. Our end of the year close process. So if we have any open purchase orders, we close them all out at 6:30. Okay, operational stuff, that's going to be rebudgeted every year. Okay, we have an open PO for, crush and run for Public Works. We're going to close at 6:30, July 1, we're going to open a new one. That stuff is budgeted every year. If we have an open encumbrance in a special revenue fund, say a project didn't get completed, piece of equipment didn't get purchased, okay, we're going to assess that need. Okay, yeah, we really still need to do it, or no, we don't. If we do, it's going to roll into their fund balance of that special revenue fund. And of course, a new PO would be created July the 1st. Page 53, it's referring to the county commitment with MCI Holdings. So note 15 on 52, it begins on 52, I think it finishes up on 53. It discloses all the county commitments like contractual agreements, lease agreements. So we have an agreement with MCI Holdings to lease Mount Zion. It's a 7-year lease, and the total over the 7-year period is $4.2 million. This is not a debt, this is a commitment. It's a future lease commitment. And just to give a little bit of a current, our last month in was,
Excuse me.
Yes.
Go back to the previous slide.
okay,
But one of the things is, the lease is 4.2 million. However, that's not the total cost of my design. Am I correct, Ms. Taylor?
That is correct. There's an in payment.
So, but it didn't include the total. Okay,
That does not.
okay.
where we are on December 31st. Of course, here's our adopted budget, and you can see, and this is all general fund. This is, our main Fund 100. Our year-to-date revenues are 7,809,000. Our year-to-date expenses are 15,086,000. So we're showing a little bit of a deficit right now. But I put last year up as well, and you can see we're basically on the same pace. And as I said before, we collect all of our money January, February, March. So when we roll around on December, this is kind of how it looks. March 31st, it'd probably look a whole lot better. But that's just kind of give y'all an idea of where we are right now. And this is just a little chart of our general fund expenses. And you can see, like right here, these two pretty little greens, that's health and welfare and public safety. So that's EMS, fire, police, coroner. That's about 53% of our budget is, basically our emergency response team. And what's next? The budget. So starting in, mid-February or so, administration and financials, we'll start having department meetings and working through, agencies will submit requests. And this year, I don't really know with some of the restrictions on meeting and different things. I don't know if we'll meet with all of them, or I don't know exactly how it'll look this year. Probably slightly different. Sometime in April, maybe the second meeting in March, or the first meeting in April, we usually kind of aim for the first reading, and then we'll have, usually it's roughly 3 work sessions, and then April and May we'll go through with the second and third reading. Does anybody have any other questions?
Ms. Paul?
Yes.
So, Ms. Bass, is it safe to say any kind of findings that were found in 2019 by the audit have been corrected in 2020 besides the procurement process? Everything else that was found has been corrected?
It has, and we do need to get that manual. I think we're getting really close. But as you saw in my timeline, it was about July. I want to say it was July 21st when they submitted their suggestions. Of course, our year end is June 30th. It just wasn't a lot of room. It's been a lot happening in those couple of months. But we will get that finished up and get it back to y'all for approval for sure.
Thank you.
Anything else?
Any other questions? Mr. Taylor, we've gone up, I think it's probably about 8% a year. If we look at the budget, do you, for next year budget, do you see us being able to stay on the same course, not raising taxes, making cuts? How do you see this?
No, we cannot continue at 8%. I think we're going to have to look at a combination of, and we've put it off for a number of years. We may have to consider a millage increase, and we may have to consider some cuts. And we have made a lot of investments in economic development, and some of those will show as far as taking a hit to our budget in this upcoming audit. But, and I'll use for an example, M. Lilly. We had to put a fair amount of money into that building. The building was worth $8 million. It's worth $28 million today. And we pulled down a lot of state money to also get invested in that, and we created about 600 jobs. But it took a lot of money to get us to that point. And we won't see a return on that investment really until the following year. So essentially what we're going to have is, before we start getting a return on a lot of these investments we've made, we're going to have kind of a down year this coming year. And we cannot continue, and I've said this many times before, to just balance our budget based on pulling money out of our reserves. And we've done that for a number of years. And as Ms. Bass said, we've been lucky not to have to use that, but we've had to use it this year, and we took a hit because of that.
And then use it last year. Then it looks like you're going to be able to use. You're going to have to use some this year too. So
Right. I would imagine we're going to have to use a little bit this year too.
Yes. Okay.
Until, again, those returns on a lot of those investments start kicking in the following year.
Okay, thank you. Do we have any other questions? I want to thank Mr. Taylor, Ms. Bass, and all those who prepared the this financial report. I tell you what, I think it was really informative, and thank you again because I know you got your regular work to do, and when we asked you to do this, it was I just want to say thanks. Okay, clerk to council report none. County council time. Anyone want to be recognized? Sir, Mr. Paul.
I think all council members received an email concerning our Public Works Director and a great job that he did recently on a call that he went on. So I just wanted to put it on record and commend Mr. Burrows from Public Works for doing a great job and being professional.
Any other members of council? Okay. On the agenda is executive session. A, legal matter, receipt of legal advice from the county attorney relating to litigation involving the county pursuant to South Carolina Code 30-4-70A2. Then there's a personnel matter discussion, receipt of legal advice regarding employee contractual matter pursuant to South Carolina Code. So, can we get a motion to go into executive session? For those items.
Mr. Chairman.
Okay, it's been moved and second that we go into executive session. Ready to vote? Any discussion? All in favor? Aye.
Aye.
Any opposers? So we are now going into executive session at 7:06 PM. Okay, it is now 8:01. Can we get a motion to come out of the executive session?
So move, Mr. Chairman.
Second.
Moving second that we come out of a executive session. And before we take the vote, we want to let you know there's no decision made in the executive session concerning any of the items out here. Okay, so are you ready to vote to come out of the executive session? All in favor, let it be known by aye.
Aye.
Opposed, the same. So we're now out of executive session.
I have a motion, Mr. Chairman.
Mr. Pratt.
I'd like to make a motion that we renew the administrator's contract up until June 30th of 2021.
I second.
Okay, it's been moved in second that we renew Mr. Taylor's county administrator contract to June 30th, 2021. Discussion? Yes, sir.
I think we need to give Mr. Taylor's contract a longer time for a year. I think Mr. Taylor's done a great job in moving Fairfield County forward. So I would like to see it at least for a year.
Thank you, Mr. Paul. Any other discussions?
I'd have to agree with Mr. Pauly as well. I'd at least say we should give him a year for evaluation if that's what the new council members want, so.
Thank you, Mr. Robinson. Any other discussion?
Discussion. As a new council person, I think that basically, we've not had a chance to work with Mr. Taylor, and we've taken a look at some of the legal ramifications and some of the legal points that have been made, and giving us a chance to work with Mr. Taylor and to be able to evaluate him the way that it should be done, and having some relationship with him and his work is basically what I see as a new council person that I need to do.
Okay, any other discussion? If not, are you ready to vote? All in favor, let it be known by the word aye.
Aye.
Opposes?
Nay.
Hey,
So it's 4-3. We've already used council time. So are there can we get a motion to adjourn?
Motion to adjourn, Mr. Chairman.
Been moved and seconded that we stand adjourned. All in favor, say aye.
Aye.
Opposed, nay. Meeting stand adjourned.